presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-873-7618.
This is awesome. Commentarez-vous. We're going over to Paris. What's happening?
Hey, Tom, it's Adam from Paris. How are you, sir?
I'm doing great. Adam, yourself?
That's good. Long time no talk. I appreciate everything you've done for me and my family over the years. So,
well, we appreciate you growling and prowling with us.
Yeah, sir. I've done gold reports and all the softwares and all your books and read it. Generational thank you.
Thank you so much. Appreciate it.
Yes, sir.
Now, Tom O'Brien.
What's going on, everybody? This is Jacob Shoup. You're watching the Tom O'Brien Show. I hope you all had a fantastic weekend. I know mine was relaxing. Cooked a few skirt steaks, made some chimichurri. If you guys want the recipe, you know where to reach me. You can email me at jacob@tfnn.com. It was fantastic. Man, I was out of the office for a little bit today, and I come back just a few hours ago, and the market is just rocking to the upside here. The SPY trading up 0.72%, trading at 605.08. Get the composite trading up about 1.11% at 19,741. The Dow Jones Industrial trading up about 0.33% at 44,448. And you have the Russell futures trading up 0.48%. Now, that is lagging a little bit, at least looking at the E-mini, right, the futures, whereas what we've seen recently with the Russell, okay, its movements are kind of exaggerated against or along with the rest of the market, mainly the E-mini. So it's interesting to see, again, my whole theory that I was trying to rock with is that you'd have that breadth narrowing a little bit, where your big companies probably, let's say, wouldn't get as much attention, and your smaller caps would start seeing some capital flow. And that is, of course, happening. I think there are some risks with smaller companies in the U.S., especially with some of these programs being cut. But we can talk about that a little bit more later. Look at crude oil as well, trading about 2.08% at $72.47. That is fantastic. My long-term kind of operative play, at least on crude oil, really energy in general, is I'm kind of bearish on it, at least price-wise, mainly because I do believe Trump will try to produce more. There's still not a lot of clarity on how that's going to work in areas like Alaska, right? I mean, I know he wants to open up federal lands for drilling. I think his whole plan, of course, opening up the Sovereign Wealth Fund, will be to utilize some of the land assets that America has, and I think that will be achieved through leasing it for oil production. But of course, there's a lot of stuff that goes into oil production, overhead costs, namely, and it's still kind of up for debate if those regions would be viable, at least produce. Of course, we have the Permian Basin being opened up. And I do believe Trump's long-term plan is to get energy costs down. This, in theory, should reduce inflation everywhere, of course, because energy is always going to be an input for anything that you make. And, of course, you pay less at the pump as well, so that helps in a raw form with CPI. You're taking a look at gold contract trading about 1.59% at $2,933. Man, I mean, what a move. And you've listened to me. I've not been I haven't felt any strong weight towards gold. I think there was just stronger alpha elsewhere. But you're really seeing a massive move right now. You're trading, right under the all-time highs there of 2,938, probably moving towards 3,000. We were, in the 29th, we were just cresting 2,800. So quite a nice move for gold. We'll take a look at the miners actually right now, at least just the GDX, trading up 2.83% at $42 from a high of 44.22 there. Of course, we'll have Tim Ord on as well on Tuesday. We always appreciate his gold analysis. Take a look at VGZ, trading up 2.69%, 66 cents. One of Tom's favorites. Of course, you believe in that in a big way on the long term. Copper trading up 2.5% at $4.70. And you got silver contract trading up about 0.18% at $32.50. Man, copper is getting a bunch of love. We've been kind of anticipating that. Of course, I don't really have a position in copper, but you hear me every time, or you've heard me for a long time say the more we digitalize and we build out this massive infrastructure, copper will be extremely important, especially with just all the automation we're going to have. So this is pretty nice. I want to see what SCCO did over Friday. I believe they had earnings. Oh, they have earnings today. Oh, let's see here. We'll take a look at... Is that right? At least for today, you had Rockwell Automation, which did very well. I'll take a closer look at this. I thought they had earnings on Friday, but it looks like it might be at 5 p.m. Eastern time today. So we'll be paying attention to that. Of course, you know, some of these monitors can always lag the movement in the spot price, but we'll see what happens with SCCO. That's a nice kind of pure copper play there. Apple trading up 0.03%. Celsius off about 3.93%. Disney kind of cracking down a little bit after earnings. And then, of course, with that sympathy play of Fubo, that is off 3.16%. Palantir still rocking to the upside, up 4.25%. You're getting a lot of bullish sentiment in Palantir. People saying this should be a $1 trillion market cap, the same way all of your Magnificent Sevens are. So, you know, we're trading at 252 billion market cap. Not that I necessarily agree with that valuation. We were trading at a PE of 609. But it is inarguable that Palantir is basically supporting the automation campaign from the military, so you know that creates a nice floor. And of course, we're really excited about them getting in to kind of the civilian and enterprise realm, which they've seen a lot of growth in, especially over the last quarter. Vuzzy trading up 3.95%, and Tesla cracking down 353. Man, we were talking about this, right? This is the first time that I've said we should maybe be bearish, and it actually worked out. It was very rare that being bearish on Tesla worked in your favor, but we are now really hitting this 350 mark. I am still on the long term, again, end of May, maybe beginning of June at a 280, 275 for Tesla. I think you're seeing a massive problem in China. European EV growth is increasing. Tesla is losing that market share. Chinese markets are rejecting Tesla. You have BYD, who was able to put self-driving in their cars, which are far cheaper than Tesla's. And I'm not so sure that the optimist push is going to save this equity from correcting down, to around September levels, or maybe at least before Trump rally levels. You know, the way that I would look at Tesla on this, right? I mean, it's clear they have pushed the envelope in ways that other companies have not, and that should be something that is recognized within Tesla. Of course, Elon Musk heading SpaceX. I mean, that is a phenomenal company. You know, the guy at the helm is able to generate real value, right? I personally think there is a level of exuberance in Tesla that pushed it up to that 488.54 that I don't know maybe that it should be at that level. I think what's going to end up having to happen with Tesla is you settle somewhere around that September price level, and then they prove themselves going forward. If Optimus works, that's phenomenal. But I think the market is concerned mainly of illiquidity, right? So they want to pull themselves out of some of these more speculative high growth stocks. And then I think that's really one of the main things, right? I think a lot of these companies in the Magnificent Seven showed kind of decelerating growth, and people are a little concerned with that. Maybe it's time to put it somewhere else. And maybe we put it in 10 years, or maybe you put it in gold, or maybe you put it in the rest of the S&P 500 that hasn't been looked at. I mean, you take a look at Rockwell. You know, this is the S&P 500. This did quite well today. We'll talk a little bit about Rockwell when we get back. But folks, stay right there.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Welcome back, everybody. This is Jacob Shoup. You watch the Tom O'Brien Show. Working right now to get Steve Rhodes on the air, but in the meantime, man, I was reading a few things today. Of course, you have NVIDIA coming up today, which is a nice little recovery. It seems like they're just going to be in demand, up 3.92%. Again, I think that DeepSeek kind of sell-off was very much overdone. The markets tend to have this kind of... DeepSeek had been released for maybe about a month prior to that, and everybody knew what distillation was, at least in that realm. The market tends to be a little bit slow, especially when it comes to like pretty complex tech stuff like that. And so, I mean, you get this out, I think they analyzed this pretty incorrectly. It was a nice buy at these levels. And of course, I don't feel major ways towards NVIDIA. Of course, I think it'll be a staple going forward. Of course, you know, I'm more into Broadcom as well with those specialized chips. I think that's where the money is really going to be going forward. I love Broadcom. I really do. Up 4.64% today. Additionally, taking a look at OpenAI. So this is really interesting. They have a proprietary artificial intelligence chip. This, I think, could become an issue for NVIDIA, right? Again, I think we're going into this realm of specialized chips for inference on AIs. It's one of the things that I want to drill home, and this is not to say NVIDIA is going to zero or anything like GPUs and Blackwell and what NVIDIA is doing and the content updates to their architecture are so vastly important to this entire just kind of build out that we're doing. But I think that it starts losing share when these more specialized AIs come on. You don't need necessarily the GPUs for it. They're not as efficient as, say, like a TPU for certain things, right? They may not be able to do the same thing that a highly specialized chip that Broadcom can produce or that OpenAI is clearly trying to produce right now. They're planning on submitting design to TSMC. I mean, this continues to be just one of the better things to hold, because everyone's going to use them to make these kind of chips. I mean, clearly Intel cannot keep up with their foundry. I believe TSM is getting close to really ramping up their build out in Arizona for their chip manufacturing, so they can potentially skirt any potential tariffs on chips being outside of the country. And that's really the way to do it. I mean, they're very smart for doing that. TSM, of course, only trading up 0.7% today. But interesting nonetheless. I wanted to bring up Poet on this as well. This is rallying for some reason today. Now, Semtech, this is all going to come together a little bit. Semtech was making these copper wires for one of NVIDIA's racks, right? And NVIDIA has now since changed these racks, right? So this was the NVL 36x2 configuration. NVIDIA is moving away from this. So Semtech's kind of benefit in that realm, and this is all copper, right? You know, I'm a big photonics kind of guy and photonics communication, but you're seeing move away. I don't think that's what this is necessarily right now. I think this is NVIDIA just kind of switching the rigs probably for cooling to some extent. I'm not sure it's very clear, you know, really even why Semtech blew up like this. But this is kind of the assumptions that are floating around, and more will kind of be unveiled during NVIDIA's earnings. But POET is it's interesting to me that you're having Semtech move down this far, which is, again, it's copper kind of communication, with POET, who tries to do these both electric and photonic communications. You know, I wonder if we're going to start hearing somewhat soon a shift over into photonics, which we have been anticipating, but unfortunately the trade has just not really been working. Because we're just not there yet. You know, I'm still very bullish on photonics going forward, and really within the data centers. So it's interesting to see POET run up on this. To my knowledge, there's no news that's pumping this up. So if someone knows something, that could be what's going on here. But pretty interesting, and we're going to definitely be watching POET like a hawk. I think there are kind of weird issues they were having with Foxconn, where another company that they were basically joined with was accepting revenues from Foxconn, but that's just weird, and it made me feel very uncomfortable about the equity. They've since bought out that entity and can now directly receive the revenues from Foxconn. So I mean, I believe they call them the interposers, right? And this allows for photonics to communicate with electrical systems. So up 10.13% today. It'll be interesting to see if they have, you know, any news dropping somewhat soon. In this same kind of realm, where we're talking about data center build-outs and racks and stuff, SMCI, guys, now this was this risky play we've been talking about, right? And this is hitting the areas that we were kind of anticipating it was going to hit, right? Low 40s right before quote-unquote earnings. Of course, these guys were delinquent in their 10 filings, which made this extraordinarily risky, especially as they faced delisting. It seems, which is why we did not take a massive position in SMCI, but I still wanted exposure to it in the event that it did work out. That's kind of the risk tolerance that I have with it. Again, you know, if I were running some fund, I would not maybe add a bunch of SMCI at that moment unless I had some other news. Well, it turns out that BlackRock added a ton at the end of December, about $2.7 billion worth, and that is separate from the amount that they bought in August, and then a very large South Korean pension fund added them as well. So it seems like they're anticipating quality earnings and good forward guidance, and the fact that they might not be delisted. I mean, you're trading up 16.56% today, right? At 42.29. We on the show here had initiated 37 strike call, I believe. I'll check my personal portfolio in a little bit, but I believe that's February 28th is when that expires. So yeah, that play is doing quite well. Of course, we've been talking, like I said, with that Tesla short. I guess I spoke through that earlier, so we don't have to go back through it. But very, very interesting. These Blackwells are about to roll out. SMCI has the Blackwells in the rack. Their cooling technology is almost par none. Of course, you had some other companies that were getting some attention from NVIDIA when Supermicro was going through all these issues, but it seems like that's been alleviated, at least in the sentiment that's been alleviated. So yeah, trading at 42.33, 16.73% to the upside. That is pretty impressive to watch. Now, you know, let's hope we're right about it, right? We still have tomorrow. That is the actual, the day of reckoning. But I mean, this equity wants to go back up, you know, and I say that, not because, you know, we've fallen so far, but I mean, there is real value in this company. Again, the only thing that I would recommend being cautious of is, of course, they could say, hey, we're actually, you know, not going to publish, which I don't think that will be the case. But again, it's that private funding for public equity that they filed for in December, which I believe was with Everest. That gives me pause, and it makes me wonder, is like, okay, are things not going as well as they seem to be going before this whole debacle with Hindenburg supposedly outing SMCI. So that will certainly be answered tomorrow. I'm still in the long position. I'm still going to hold the long position. I will most likely try to sell around the earnings there, just because I don't want the long-term exposure. But of course, that'll change depending on what the earnings say tomorrow. So some interesting stuff. Let me check here just real quick. I'm getting a PM. All right, we'll turn that down for a moment. Okay, so other earnings. Well, let's go to the break first, but we're going to talk a little bit about Rockwell, how they did on semiconductor, got pretty smacked today. Of course, Coca-Cola. Now, I'm very interested in potentially getting some calls for tomorrow on Coke. I believe they will report good forward guidance, but we'll talk a little bit about that when we get back. Stay right there, folks.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
This year has already been a wild ride for the market. We started off heavily in the red, reversed back to all-time highs, and we now have a trade war looming. Trying to play this chop as an individual trader leads to death by 1,000 cuts. Where does this market go next? Should I add to this position or cut my losses? Where is the next opportunity? Tariffs, trade wars, analysis paralysis. Don't become a victim of this intense market. Instead, join Larry Pesavento for the second and fourth Friday of every month for 3 hours of live trading. Larry has been through many markets just like this one, and the insight he provides is invaluable. The events for this month are February 14th and 21st, 9 a.m. to noon Eastern Time. Get in here and let's start trading. TFNN, educating investors.
This portion of the Tom O'Brien Show is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Welcome back, everybody. Jacob Shoup, you're watching the Tom O'Brien Show. We're still working on getting Steve Rhodes on, but that is all right, because right now we're looking at Lightbridge Corp, okay, off 7.11%. Taking some breaths here. There's a little bit of breathing room since it ran up pretty significantly last trading session. That was due to an MOU with Oklo. Of course, Oklo is an SMR company, small modular reactor, that is owned by Sam Altman of OpenAI fame, of course. Coming back down a little bit, again, just giving back some of those gains. It was quite a strong move, and you know, if you haven't read what I wrote in October on uranium, just email me, Jacob at TFNN. Every time I bring it up, somebody emails me. I think they get value from it. But it's how do you play uranium right now? Now, if you don't want to look at your portfolio at all, I just recommend buying. Lightbridge is a little bit risky. We'll talk about it, but you know, Cameco is great. Now, I recommend that for myself. Of course, I would do your own due diligence. Quad U, I think, is great. I think Quad U is really amazing because it also has exposure to other rare earth materials, vanadium in particular, which I believe in the long term, maybe within the next 8-10 years, will become a pretty valuable kind of metal to use. But to keep it, the demand is going up for uranium, and it absolutely will be. But I'm going to give you an example of why this in the short term can be a very rough ride, okay? And so, for instance, this is coming from Power. If Energy Transfers, the company will provide natural gas to Texas data center projects. And this is what I believe most of these data centers will initially be fueled with. It's going to be natural gas. It is going to take a long time to build SMRs. It takes a while to get nuclear reactors back up. And by extension, it takes a while for, you know, some of these uranium companies to start seeing some profit. Now, CCJ will be kind of interesting to look at because a lot of their contracts are now expiring up for renewal. So the spot price is a little bit higher and they can get some more revenue. That's very good for CCJ. But another thing where this can be a double-edged sword is that they don't produce the entire amount for the contract, so they buy on the spot market. So this is a very interesting kind of thing you have to navigate. I think really on the long term, that should be a part of your, I say it should be. This is not recommendations, but in my portfolio, it is a long-term part of it. I think it's great. Lightbridge is super fascinating. These guys make doped uranium, better kind of just power density. Most likely in the future, we'll do some of these weird exotic things with uranium. But again, this is kind of long-term. So the way that if you read the paper that I wrote on it, the way that I've been playing uranium, and I think is the way to do it, is you wait for these massive run-ups, right? They inevitably come back down because there's not been real material change within the market for uranium, right? And again, this is very cyclical and they're all contract oriented. So even if the spot price of uranium goes up, it doesn't mean they get to sell at that. And in fact, it can be kind of difficult for them because again, as I mentioned, they have to buy at the spot, at market price. So that you can run into issues with that, with these companies. But since we're in such a headline-driven kind of economy right now, we're building out, and there's no doubt that these power plants will be used for data centers. You know, the way that I've been approaching this kind of stuff is you wait for it to run up. These things are going to come back down, right? You buy off of those lows, and then you wait for these big news headlines, and you sell, right? And that has worked. It's worked with UUUU, LTBR. CCJ's been a little bit different. They have some real material issues at Inkai Mines, and it's not clear how that's going to develop for them. But I do think that them being able to renew contracts right now will probably be in their favor. So we'll kind of wait to see what happens with Cameco. But I do like this equity. It's found some decent support really at this $46, $45 level. And we have a high of 62.55. So kind of interesting. I am looking at LTBR, but again, the issue with these, and it's also the issue with Oklo, you know, they're not doing anything. I mean, Oklo certainly doesn't have anything built yet, right? And it's not even clear, again, what kind will be used. I mean, Oklo does fast reactors, which I think is probably the way this stuff is going to work. That just allows them to far better, you know, fine tune, right, the energy output. So instead of having like a normal nuclear power plant, right, is going to be binary. It's either making power or it's not. And that obviously can be inefficient. Things like fast reactors, especially fast natrium reactors, like they're kind of designing out in Germany, you get this floating point deal almost, right? meaning you can just really tailor the amount of energy output you want. I think that's kind of going to be the future. So, we'll see what happens. But for the meantime, natural gas is going to dominate, a lot of the basically fueling of these data centers. Give me 1 second here. So yeah, that's Oklo, that's LTBR, that's UUU. Let me see here. Again, the longer I look at things like UEC, right? It amazes me that this equity does better than UUUU, because UUUU actually is producing, I'm going to keep saying Quad U. Quad U produces uranium, and actually does. It has exposure to other rare earth materials that are highly valuable for all this kind of space age tech that we're going to be delving into with data centers. UEC, again, plays this pound in the grounds game. They have a massive holding of uranium that's already mined that they bought at a massive discount, so that can help float them. But when I look at this company, again, versus Quad U, and I read the reports, and I listen to their management and their CEOs and what they say, I don't get inspired by UEC the same way I get inspired by Quad U. So it's something to keep in mind. And again, I really recommend doing your due diligence on these companies and see if it makes sense for you to kind of put that in your portfolio. Take a look at Rocket Lab right now. Man, these space stocks are moving. So they just released they just had their Neutron launch. I guess that was successful. Excuse me, the Electron launch. Wrong atomic particle, excuse me. Trading up 12.19% at 30.75. And again, I'm really surprised at how well some of these have held. I mean, you have Planet Labs as well, up 8.81%, and ASTS coming back from the grave. And our suspicions that we had on the show were correct. And the reason why I say that, the suspicion being, is that a lot of these telecom companies are going to start leveraging satellite communication. And that was confirmed this weekend. I was just scrolling on some social media app, and I saw an advertisement for T-Mobile. And of course, T-Mobile is working with SpaceX to essentially allow satellite communication on their network. And this is a big thing that I believe they're going to try to leverage to get more people on their plans. I believe that was what Apple was going to try to do as well. Apple, of course, went with SpaceX as opposed to GSAT, which is a little bit unfortunate. Apple's off about 0.11%. I think the LEO build out, again, low Earth orbit satellites, that is definitely a way to do it. ASTS does seem somewhat appealing to me. Of course, Rocket Labs, it's going to be rockets, but that goes hand in hand, right? You need to put these things up there in some way for sure. So, yeah, I'm looking at ASTS seriously at this point, but I'm not just there yet to be like, okay, that makes sense for me to buy. You're trading at 6.2 billion market cap. You have a negative PE. Folks, stay right there. We'll be right back.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors. For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foresight Fund Services, LLC.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Tom O'Brien.
Welcome back, everybody. This is Jacob Shoup. You watch the Tom O'Brien Show. Welcome back. Take a little look at ASTS. Going forward, again, I think there's going to be a massive low Earth orbit satellite build out. I think you're already seeing it. Starlink really started it up. Every country wants their own LEO now. It's going to be very, very integral to national security and success going forward. So ASTS is getting some decent bids with the telecom companies to provide those kind of to provide those kind of services for those telecom companies, which is mainly going to be satellite calling. In the SPY trading about 0.66%, composite about 1.02%, Dow Jones Industrial up about 0.35% with those Russell futures trading up about 0.39%. Taking a look at Coke. Coke's been having some problems, really with last earnings. What kind of happened is that, revenues were going up, but volume sales were going down. So basically what was occurring is they were just raising their prices in the face of inflation. That doesn't always bode well, for the company themselves. Now, you have some interesting stuff, at least in my opinion, going forward with Coca-Cola, which I believe you've gotten so much exposure for Diet Coke with Coca-Cola. I would say majority, and I said this earlier in the Den, and I'd recommend getting the Den if you're not in there right now. You go to the services tab on TFNN.com. You'll see it right there, the Tiger's Den trading room. But there is such this cultural obsession right now with Diet Coke, right? And you predominantly see it in women's circles, online, the memes that they create. A lot of women that I know in real life are drinking Diet Coke, but women I've never, seen do that kind of stuff before. It just seems like it's become so much more dominant, at least in my life, where I see people drink about it, drinking it, talking about it. You, of course, have Donald Trump is a prolific drinker of Diet Coke, and Diet Coke gave him, some sort of specialized bottle for his win. Elon Musk has tweeted about it. Tons of people are tweeting about it on Twitter. And again, this is Diet Coke, but I'm sure Coke in addition as well. But if you look at some of the trends for Diet Coke on Twitter, I mean, people are memeing, even hashtags on Instagram. It's become the chic thing to do. So that is a little bit interesting for me. When you're talking about a company that sells, consumer goods, that's a super important thing you need to keep in mind. Additionally, they have big exposure in Fairlife, which is a milk company. I'm not a huge fan of Fairlife, but no doubt those things sell very quickly. See it at Publix. People are always kind of buying that. So that's a little bit interesting. We'll see if that actually works out for them. Of course, liquid milk, liquid dairy consumption has really been on the decline since the 70s. I think a lot of Americans are eating, the numbers will show that Americans are eating a lot of dairy products, but they're not drinking fluid milk. There seems to have been an uptick in that in October and November as well, with about a 1.61% increase year over year. So we'll see if Coca-Cola can get any exposure to that. One of the things I will say that I think can be a problem with Fairlife is a lot of the new attention that you're seeing with milk drinking is actually going to be for raw milk. These are going to be smaller boutique ranches and farms. Of course, it is illegal to sell raw milk for human consumption in the United States, but nonetheless, people get their hands on it. And so I would be cautious if you want to do the same kind of, trend analysis on, let's say, milk that I was talking about with Diet Coke. You'd be a little bit aware of what the nuances of it, right? So we'll see. We'll see what happens with it. I'm bullish on Coke. I am considering kind of taking a little bit of position just to see if we can make something work for that. I mean, again, numbers-wise, you had to decrease volume. They were only making money because they increased the cost of their units. So hopefully we can see that trend reversal. And I think we probably will, just because of those reasons I mentioned prior. So something interesting to see. Of course, you have Shopify as well tomorrow. That'll be nice to see. Let's see what else we have. DoorDash. Again, I spoke about DoorDash on Friday. They're really expanding into online, providing online ordering services, even for pickup. And their premiums are ridiculous. But I do not believe that the average American hunts around for that kind of stuff. It's the first thing that goes into your face, and you kind of have to search a little bit further to get cheaper goods. I think just the prevalence of DoorDash's business, the prevalence of DoorDash with its business model shows that people are kind of just wanting the convenience aspect behind everything and will pay a premium for that. And it is certainly far more convenient to pay DoorDash a buck or whatever for every order as opposed to like 20 cents with Grub or something. Cisco on Wednesday. You have Equinix as well, CVS Health, Robinhood. We'll definitely be looking at that, and then Waste Connections. On Thursday, you have Applied Materials, Palo Alto, which will be interesting to see, Duke Energy, which I almost just want to buy because they keep charging me so much money every month. Let's see what Duke's trading at. 115, yeah, nice. Again, one of the things that Duke Energy does, and I tell this story, when you had that kind of spike in natural gas prices in 2021, that was irregular, but it came back down and started trading, at historic lows for really an extended period of time, right? And one day I get an email, it's from Duke Energy. It's like, hey, we got to raise your rates. It's been a very volatile time in natural gas. And I'm like, what are you talking about, man? I'm looking at these charts every day, and we're at near lows. And what I realized they were referring to is that I think it was about a 4-month period where it was very volatile in natural gas. This was years ago. And, they're raising the costs for it. The thing with these energy companies is they will never reduce the cost, especially when you have, this is not necessarily a monopoly. I would say in St. Pete it is, but of course in Tampa you have Tico as well, so you get a duopoly kind of going on there. They never, lower their prices. They lower their rates at all. So long term, Duke's great for that kind of reason. As much as I could disagree with their business practices that I think are kind of predatory towards maybe smaller people, I don't know. That's what we're looking at. But they'll definitely have their earnings on Thursday, so we'll be following that quickly. Airbnb as well. Got Honda, Telus, and Magna International on Friday. So yeah, we had such a fun past 2 weeks with earnings. And we're kind of going to slow down a little bit as well, which is unfortunate. But we'll see what happens. And you have A-Lab today as well. Okay, let's move on here to Rockwell Automation. This is another interesting thing, kind of in the same realm with Coke, where their margins, this is a little bit different, right? Coke obviously had decreasing volume, they increased prices. What Rockwell has been doing is really been cutting their input costs, which is really quite good. So let's look at this a little bit. They had a decrease in total sales of 1.8 billion. That's down from 2 billion in the same quarter the previous year. Operating earnings were 321 million compared to 356 million. Lower sales volume and the cost reduction is really what's saving them. They reported a pretty solid EPS. And from that essentially. Net income of $178 million compared to $213 million. And let's see here, the adjusted EPS was $1.83. Cash provided by the operating activities, now this is really the good stuff, was $364 million. That's cash provided from operating activities. The same quarter last year was $33 million. So these cost-cutting measures that Rockwell is doing, it's definitely working. Folks, stay right there. We'll be right back.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. A must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the newsletters tab on the front page of TFNN.com. TFNN. Educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, everybody. This is Jacob Shoup. You're watching The Tom O'Brien Show. Thank you for joining me today. If you're watching us on YouTube, welcome. Please consider liking the stream, if you don't mind. And then consider subscribing as well. We are going to continually bring you fantastic stuff. Of course, we stream from 9 a.m. to 4 p.m. Eastern Time every day that the market is open. I was looking up right now. You had Rivian. And again, I have a complex relationship with this equity, to say the least. Up 4.01% at $12.98. I had held it for, let's say, like 6 months or something like that, really anticipating them to go profitable. And they just kept hitting snags, unfortunately. And then you had the guy come out and say, hey, we're not really a vehicle company, we're a software company. And, well, it says on your inform that you sell vehicles, and they're doing so at a loss. And so they're out of this period with Amazon where they're selling, if you've seen them around, a lot of the new Amazon trucks, if you see them with the lighter blue back door, okay, those are going to be Rivian vehicles. So that's pretty cool. They no longer have the exclusive arrangements, right? They originally were supposed to produce 100,000, and they had something like 20,000 in utilization right now, which is never great. And I think the two vans are starting at what, 79,900 and 83,900 respectively. You know, this did work for Ford, right? But I think Ford could produce that, you know, at a profit. It is not clear to me that anything in Rivian's operations is going to make it that they can produce these vans at a profit. Again, it sounds like another line to get people hyped, and that's fantastic. But they've continually had supply chain issues. I think you're having a major, the Trump administration is not pro-EV the way that the Biden administration was, especially with the Inflation Reduction Act. You're seeing that get hit, Tesla get hurt with that by them not making the energy relay, the energy charging relay. So I don't know. Dubious of Rivian's success in these coming 4 years. Folks, thank you so much for joining me. We'll see you tomorrow morning, 9 a.m. Take care.